G'day guys, and welcome back to Financial Fruits with Joshua. Welcome to part 6. Just an FYI, with part 6, we're going to talk about, a different sort of investment, okay? So basically with part 6, we're going to talk about alternatives, okay? So alternatives, we've gone through the traditional 5 asset classes, which have been cash, fixed interest, property, and infrastructure, as well as a subplot, domestic equities, and international equities. So alternatives, there's a lot of different alternative investments where they're not tied to the market. So Forex is one of them. But Forex is highly risky. Crypto is another. Then you got collectibles, which you can form a part of crypto as well. And then you've got what other alternative investments as well that aren't directly tied to market. You got agribusiness, but that's a bit of property as well. But you got a lot of alternatives that are not tied directly to market. So it is basically got a low correlation market. So if the market goes down, the alternative investment could increase as well. Now, some alternative investments could be high conviction funds as well, which are known as hedge funds. That could be alternatives as well. But we're going to go through like the alternative assets in a nutshell overall. So the first one I'm going to go through is Forex. So Forex is basically currency trading. Okay, so basically what you are trading against is like, you're trading either you're buying currency to buy currency, believing it is valued too low, to sell when it is high. And then you also can sell when you're thinking it's high, and then buying out when it's low. Okay. Now with Forex, there's no capital gains because it's not an asset. Since it's not an asset, so a lot of people, actually no, you know what? That's wrong. Okay. Disclaimer, by the way, this is not financial advice. Okay. Some people feel like there's no capital gains associated with it. However, check your verify with your accountant, okay? You don't want to do currency trading and realize that any profits you make is accessible income, okay? Some people in Australia believe it's not accessible income. And if it isn't, your tax office will make it accessible eventually, okay? If you do make a profit of it. So a lot of people, I can tell you right now, there are a lot of people who claim they have sold Forex and can make you very rich. Okay? And they offer you a program to do it. I'm going to say 99% of them are scams, okay? They only do it to profit themselves, not you. Okay, so you may see a lot of those around. Okay, some guys, come in on Instagram and Twitter being like, oh, I can turn 1 grand to 500k in 24 hours with Forex, which is impossible, okay? But when they give you the grand, they make all these thingos and you've lost your money basically, okay? They've just taken a run with it. So with Forex, I can tell you right now, Forex is incredibly risky, okay? Because basically, you can lose a lot of money very quickly, and you're very little to get it back. Okay, it is very volatile. Any risk for shares is also magnified with Forex, because you got to realize Forex is a pretty huge market. Banks are trading Forex basically every day because one person may want AUD, another person may want US dollars. And basically, you can go back and forth very, very quickly. Also, you're subject to political risk as well if people aren't trading with another person. So your currency position can be stuck. And all I'm going to say overall is that if you're a new investor, stay away from Forex, okay? Stay away from alternatives, okay? The reason why is that if you don't understand an asset, don't invest in it. Okay, that's a simple put. If you don't understand an asset, do not invest in it. You know what? I'm going to put this at the top, okay? For you guys, okay? Because this is very, very important. Okay, next up we're going to get to the next one is crypto. So crypto is very new. So what crypto does is that I believe like some of these assets, they generate a coin from, or a code from computer power. And that becomes a coin, a tradable coin. It's a, yeah, that's pretty much it. You can also put NFTs here as well, but no one cares about NFTs anymore. They're just a craze. NFTs do the same thing, but it's a link to an image. You don't own the image. Okay, that's not. You don't own it. Now, NFTs are, I gotta say right now, both of them have wallets. Like, you have a wallet where you can keep certain coins, and you can trade them with others. There are also stable coins as well, where you can convert your coins to money, to USD. At the same time, guys, as well, settlement takes forever on crypto. Crypto works on a decentralized open ledger system with lots of marketplaces being able to track and view transactions. Everything is public and traceable. Oh my god, I forgot what it's called in crypto. Now, how do people work crypto as an investment? Okay, people believe that crypto will eventually become the main currency. Such as I don't know what it is. There's a Guatemala that legalized Bitcoin, which has not gone well with them at all. Guatemala and a few other areas are accepting BTC. Okay. So so people are believing the hype or the speculation that they can actually trade the currency for real life stuff. That is the biggest speculation for this. Okay. Crypto, funnily enough, crypto, despite being an alternative, is very tied to the market. Okay. Now, some people may be like, "Oh no, it's not tied to the market." The thing is that it did the same thing as collectibles. So what happens in a bear market? Collectibles are the first thing to fall. Okay. Now, also it has been pretty bearish recently with interest rates going up. What was the first thing to fall? Crypto. So crypto and collectibles share a lot. Now, this is what I'm basically going to say is very controversial. Collectibles and crypto are probably the same. I'd probably put crypto and collectibles. I would not put them as a real alternative asset, to be fair, because at the end of the day, basically they started going down the moment interest rates going up, and I think that's what we call collectibles, and a lot of the crypto banks started to become bankrupt basically as well. But then again, they offered ridiculous amount of returns. A ridiculous amount of returns. Now with crypto as well, crypto has no regulation and has its own con artists. Okay, I mean, how many rugs have we had since crypto started? I think we had Jolt Coin, we had what was it? Save Our Children coin, what it was? Yeah, Save the Children coin. That was a rug. MILF, Dink Doink, you name it. Okay, loads of rug pulls. Okay, and this is because it's not regulated. Now, someone might be going like, "Oh, regulation doesn't mean it's secure and perfect. Stock traders cheat all the time, mate." The thing is, there's insider trading on a lot of these rugs, not full transparency. Because the companies you have to have full transparency. As a company, if you want to trade or buy or sell shares in the market as a director, you have to disclose it 5 days before you do it. Okay? With these guys, you didn't have to disclose anything. Everything was found out after the fact about how much they got. Okay? So just be aware of that as well. People are finding out why regulation is important. Scams, hacking, etc. With the risk of crypto is just basically market risk plus personal risk, cyber attacks and stuff like that as well. Do I recommend crypto? As I said before, if you don't understand an asset, don't invest in it. Okay, crypto is another one. Okay, it's another one like Forex. incredibly risky and incredibly illiquid as well. It is basically worse than Forex, okay? So if you want to get your money out of crypto, it is incredibly difficult to get your money out of crypto because of the decentralized open ledger scheme. And it can take even days and weeks to get your money out, basically. So be aware of that as well. Like, a lot of these alternatives, you know, are essentially immature assets, and some of them are just weaker assets altogether. Now let's get to the next one, collectibles, okay? So NFTs, by the way, NFTs fall under the same thing as well, okay? NFTs fall under the same thing. It's basically like crypto, but you don't own, like, you only own a code, not the actual thing itself. Now we're gonna get collectibles. So collectibles, what are they? Paintings, gold, I guess. Gold, silver, whatever. You know, at this point, like baseball cards, lobster pots, crayfish pots. I don't know. I think everyone knows, okay, what collectibles are. Collectibles are not very good investments. Do not pay income. You are essentially hoping for the value to go up due to rarity or whatever it is. Scarcity, etc. Hype. Basically, overall, collectibles go incredibly well during a booming economy because people have money to spend. Now, this is similar to crypto because crypto had a similar market trend as well, where it went down when collectibles went down and went up when collectibles went up. Maybe I should actually make it sense. This is similar to crypto because it is similar to crypto. Now, overall, I wouldn't invest. Okay, I guess I wouldn't invest in collectibles. You have an asset that may go up in an uncertain time frame that pays no income. Okay, like that's probably one of the worst assets you could probably have. Like it could go up. You don't know when, but during that time you don't get any income. So you could be dead by the time it actually goes up. So that's why it's not a good asset. Let's compare it to the other assets as well, like, you know, say Australian shares, okay, or domestic shares. So Australian shares, you have an asset, or you have a share in a company that could go up or down, pays income, and it can go up and down in an uncertain time frame as well. But you know, but it pays income. You see what I got there? You see what I mean? Why collectibles is the worst asset? At least you get some income while you hold that share for the chance to go up and down. So you're getting some sort of reward out of it. Given that the share does pay dividends, of course. And yeah, overall of collectibles, it's not really, I gotta say right now, it's just really hope. It's really just copium, pure copium. Like a lot of these collectibles stuff like that is just pure copium, unless you know the market very, very well. Okay? As I said before, if you do not understand the asset, do not invest in it. Simply put. Now, hedge funds. So hedge funds, I'm going to say right now, they're just active traders generally that basically trade on their own benchmark. So basically they'll sell and buy shares. They'll also sell and buy like options, which is basically a right to buy or right to sell a share at a certain price. They're known as derivatives overall. Basically, they'll go into a mixed match of those, and essentially they'll, you know, try to sell high, buy low. They may take short positions, which is basically selling an asset to buy later at a lower price. And essentially what they're trying to do is basically they are trying to get ahead of the market. So getting ahead of the market is just getting ahead of the index basically as well. And that's what hedge funds tend to do. They're an absolute return fund, which means they are trying to get a return that isn't tied to the market. So that's the main thing they're trying to get. Now, overall, hedge funds, they can be good. And also they can be bad. Because too active could mean that you return less in the market. Reason why is that you could have sold at a worse time and bought when it's high again. Generally, it depends on the skill of the investment manager in a hedge fund. So generally they have this argument whether passive index investing is better than active investing. Generally speaking, from history, it is the passive side that wins due to less fees. That is the main thing there as well. Now with hedge funds, I'm going to say right now, unless you know the market very, very well and you feel like the investment manager is very, very capable of this job, do not invest, okay? These alternatives are usually generally very fledgling assets or collectibles, or just never, basically, they're just hidden hopes, okay? A lot of these collectible assets are hidden hopes. Like a lot of these people who advertise these collectibles, like, paintings, Beanie Babies and stuff like that, act like they're the next best thing. They're going to be, trading in Beanie Babies in the future and they can only go up. This is just FOMO hype, and that's literally all these assets are basically, essentially, pretty much. There's no mortar and, brick and mortar behind it. It is just basically smoke and mirrors and fluff. So I'd probably say right now, like, if you want to start investing, I'll probably stay close to the classical asset classes because they've been well developed. You know what you're buying basically as well. There is regulation behind it, so you can't get scammed by people or anything like that. That's pretty much it. And a lot of these other alternative investments rely on a lot of smoke, mirrors, lights, and stuff like that to try and get you through the door. Anyways, guys, hope you guys have a great day. Hope you guys enjoyed Financial Fruits, the alternatives, and my quick glance at all of them. And hope you guys have a great day. See you guys later. Peace out. Bye.